The day a small bet shook a giant empire. It started with a whisper that no one noticed. A bet so small it barely registered on the market tape. Yet within weeks, that quiet move would rattle one of the most powerful empires in modern finance. To understand how it happened, we have to step back into a world that looked stable on the surface. Markets were rising. Confidence was high. The giant at the center of it all believed it was untouchable. But beneath the glossy reports and confident speeches, cracks were already spreading, thin as spiderwebs and just as easy to miss. This story matters now because the pattern hasn't disappeared. Investors still place small wagers that signal deep uncertainty. Institutions still ignore warnings hidden in plain sight. And entire systems still rely on the illusion that giants cannot fall. But history shows they can, and often because of decisions that seem trivial at first glance. The first reveal begins with a young analyst working miles away from the empire he was about to challenge. He wasn't famous. He didn't have a massive fund behind him, but he had something rarer, an obsession with details. While others skimmed summaries, he dug into footnotes. He noticed numbers that didn't align, trends that bent in odd ways, and he recognized a pattern nobody else wanted to see. His small bet wasn't made from arrogance. It was made from unease. A quiet conviction that the empire's foundation wasn't as strong as it claimed to be. It was a hedge at first, a way to protect against an unlikely risk. But even as he placed it, he sensed the story was larger than anyone assumed. Then came the second reveal. The empire itself was celebrating a record year. Executives praised their strategy. Analysts echoed the applause. Headlines called it unstoppable. But inside the data the young analyst studied, something pulsed like a faint alarm. Profit rising while core indicators slipped. Debt climbing with no explanation. Assumptions layered on assumptions, until the whole structure leaned at a dangerous angle. The third reveal arrived quietly. A single report. A single overlooked metric. And that was enough for the analyst to lean in, realizing this wasn't a hedge anymore. It was a warning disguised as a trade, a signal that something monumental was approaching, even if only one person could see it so far. He kept watching the numbers as they shifted, not dramatically, but subtly, small deviations that most investors brushed aside. Each quarter brought new signs that the empire's internal engine was slowing, margins narrowing, inventories rising, cash flow dipping with explanations that never quite added up. The market shrugged, convinced the company's streak would continue. But the analyst knew that streaks don't break loudly. They crack in silence. He expanded the bet, still cautious, still quiet. It wasn't a bold strike. It was a defensive line in a storm that only he could feel. And the more he studied, the more the contradictions grew. The empire's growth relied on assumptions that required perfection. No missteps, no downturns, no surprises. Yet the world was already changing. New competitors emerging, old markets cooling. The empire acted as if none of it applied. Then came the first real conflict. The realization that the analyst was alone. He tried to raise questions in forums and private circles, but they were dismissed. Veteran investors laughed off his concerns. Too small to matter, they said. This company has weathered worse. Confidence in the empire had become a kind of religion. Doubt, in turn, was treated like heresy. Still, the anomalies continued to surface. A delayed report, a revised outlook hidden in footnotes, a sudden shift in accounting policy that looked harmless but felt like a patch over a widening tear. The analyst's discomfort turned into quiet urgency. If he was right, the empire wasn't just slowing, it was losing control of the narrative it had built. The next layer of conflict emerged when the empire announced a new expansion plan. It sounded bold, visionary, unstoppable. But the analysts saw a desperation in it. Expansion during weakening fundamentals rarely ends well. It often signals a need to distract shareholders, to project strength while masking fragility. And the numbers behind the plan didn't align with reality. Revenues were flattening. Costs were rising. Debt was piling higher. Yet the market cheered. The analyst doubled his position, not out of confidence, but out of conviction. Something was wrong. Something big. And silence was no longer an option, even if nobody was listening. What he didn't know was that the empire itself was beginning to feel the tremors he had been tracking for months. Cracks forming internally, departments under pressure, executives making choices that would soon push the entire structure into the open. Inside the empire, the pressure was building faster than the public realized. Reports that once flowed smoothly now arrived with gaps. Teams that once operated with precision began missing targets. Senior executives held longer meetings, offering shorter explanations. And beneath every polished statement was the same unspoken truth. The numbers were slipping beyond repair. The analysts sensed this shift before it appeared in headlines. Data lagged reality, but fear showed up early in the smallest details. Vendor payments delayed by a few days. Inventory cycles stretched longer than usual. Insider transactions that seemed perfectly legal yet strangely timed. Each signal alone was harmless. Together, they formed a pattern that pointed to a looming break. He deepened his research, pulling old filings, comparing subtle changes from year to year. It painted a picture of a company slowly losing altitude, pretending the ground wasn't rising. The empire had built its reputation on predictability, but predictability had become a trap. Any hint of weakness risked shattering the illusion that kept investors steady. So the illusion had to be protected, even as reality strained behind it. The conflict sharpened when the analyst discovered a quiet revision hidden deep in a supplemental report. A line item that had always been transparent was now obscured. Not removed, just blurred, like a window fogged intentionally. It confirmed what he feared. The empire wasn't just struggling. It was actively trying to buy time. Yet buying time is not the same as buying safety. The market remained blind. Analysts praised the firm's resilience. Commentators called it a model of modern efficiency. But inside the empire, internal debates grew tense. Should they reveal the downturn and risk panic? Or push forward and hope the storm passed before shareholders noticed? The wrong choice would accelerate the fall. The right choice would demand honesty they weren't ready to give. As the empire hesitated, external pressure surged. A global shift in supply chains tightened margins even further. Competitors seized opportunities the empire ignored. Once loyal partners began stepping back, sensing uncertainty they couldn't explain. And the analysts watched all of it unfold like a slow, inevitable collapse. The buildup reached its peak the day he matched all the anomalies into a single timeline. Every misstep, every delay, every suspicious adjustment, they all converged on one unavoidable conclusion. The empire's foundation was failing far faster than anyone understood. The small bet he placed months earlier wasn't just sensible, it was prophetic, and just as the pattern became undeniable, something unexpected happened. A leak surfaced, anonymous, sudden, and explosive, a document hinting at internal losses that dwarfed public reports. It was vague enough to be dismissed, yet sharp enough to pierce the empire's armor. Markets wavered. Investors whispered. The silence that once protected the giant began to crack. And the analyst realized the moment he had been bracing for was finally here. The leak spread faster than the empire could respond. Within hours, analysts demanded answers. Reporters camped outside headquarters. Shareholders who once praised every decision now questioned the very foundation of the company's success. The empire issued statements, calm and polished, insisting everything was under control. But the market had already sensed blood in the water. Then came the moment of rupture. A single earnings call meant to reassure the world instead exposed the truth. Numbers that were once steady dropped sharply. Projections collapsed. Executives stumbled through explanations that convinced no one. The empire's facade shattered in real time, and the shock rippled across every corner of the market. Something colossal was falling, and it was falling fast. The analyst watched from a distance, not with triumph, but with awe. His small bet, born from unease, shaped by research, strengthened by conviction, had aligned with reality in a way no one else predicted. As the empire's value plunged, his position surged. But the money wasn't what mattered. It was the clarity, the confirmation that small observations, patiently followed, can reveal truths hidden from the entire world. The climax unfolded over days. Panic selling, emergency meetings, regulators stepping in, The empire that once seemed immortal now fought for survival, dragged down by the very weaknesses it refused to confront. Markets that once celebrated its dominance now turned cold, calculating, unforgiving. A giant brought low not by a catastrophic event, but by 1,000 quiet choices left uncorrected. And when the dust settled, the world asked the same question: how could something so powerful crumble from something so small? The resolution came later, in reflective hindsight. Stability, people realize, is often an illusion. Empires fall not because of one dramatic blow, but because of signals everyone ignored. The analyst story became a reminder that truth rarely announces itself with noise. It begins silently, in footnotes, in patterns, in minor shifts that only the patient notice. And in modern markets, still driven by confidence, still vulnerable to illusion, the lesson echoes louder than ever. Subscribe to join the journey.